Hey, I want to welcome you guys back to another episode of the AWM NFL Podcast. My name is Riccardo Stewart, and I'm your host, and I'm joined with my friends and my coworkers, Jeff Locke, Sam Acho, and Zach Miller. Fellas, today, the topic I want to talk about is I want to fly at a ceiling or a floor at 10,000 feet in the air. But as Zach Miller let me know, that cruising altitude is actually 35,000 feet. And primarily looking at the idea of building multi-generational wealth through investing. And I want to make sure we're talking about investing because investing is not the only way you build multi-generational wealth. There's so many other things that we've talked about. But today I want to go, what is a general understanding of investing? And particularly I want to use this picture of the three different buckets of investing. And so let me start with this. I'll start with an illustration. And I have a son. My oldest son's a quarterback. And I watch film with him. We go over everything and so forth. And what I always ask him is, what's your progression? When you drop back in this particular, what is your projection? What your progression? Like, what are you looking at? And there's a reason for that, because most quarterbacks don't just drop back and just throw it to whoever they think is open. Usually a coordinator says, okay, I want you to start here and then here and then here. And I think similar when it comes to investing, when you have a plan, there's all sorts of receivers running routes. But what's your progression? There's all sorts of investments, but what are actually the progression? And so I want to talk about those three different buckets. And first, I'm going to start with you, Jeff. There is this first bucket, and I like to call this the quick out or the check down. This is getting that 1st and 10, and I want to get 5 to 6 yards to stay on schedule. What does that look like for NFL players?
Yeah, so like the check down, not a lot of people want to do it. They want to go downfield first. They want to do other more exciting things. But I know that knows ball knows it's a very important play. It's the thing you got to do first. Another analogy I like to use is like it's like trying to throw downfield with only 4 offensive linemen, right? You kind of need that 5th offensive lineman to kind of have a chance of doing anything else on offense. So bucket 1 is 2 things. First thing is protection, emergency funds. My break in case of emergency money I got to get to, right? Second thing in bucket 1 is stuff that's coming up in the near future, stuff I got to pay for, right? Tax payments. I got kids' school. I want to buy a house next year, so I got the down payment money set aside. So Riccardo actually uses this all the time, right? It's like when you're on a plane, since Zach loves the plane analogy, we know that now. You have to put your own mask on first before you help others, right? Or you're useless, right? You're both going to pass out if you don't put your own mask on first. That's bucket 1, right? And you got to do the fundamentals, get bucket 1 filled up before moving on to the other exciting buckets we're going to talk about next.
So I get bucket 1, and those are probably more safe investments. Sam, I love the perspective you have, and all of you guys as former NFL athletes. And it's easy for us now because we're in this world, we're all a part of a family office. But if you can go back and go, when you were beginning to invest, when you were being a part of this process as an NFL player, a current and active NFL player, were these things communicated to you? And if so, how were they communicated to you?
So yes and no. So initially when I first signed with an advisor, let's just start about when I really started investing, put it that way. I signed with the firm and the person who was helping run that firm was a very trusted person, was awesome. So I have a great relationship with this person. But some of these things, maybe they were communicated, but I just wasn't paying attention. And so I think that's the biggest lesson I would tell guys is just to pay attention. Jeff, you talked about the emergency fund. As an athlete, you're thinking, I don't need an emergency fund. Like, I'm good. I'm getting paid. I'm getting my checks, all these things. But the fact of the matter is it's more than just a budget. Everyone tells you, oh, yeah, budget. But no, think about the needs that you have, maybe for the next 6 to 12 months. Maybe you're married, maybe you're not. But having that emergency fund builds a great reservoir for you, not only now when you're playing, but also when you're done playing to say, okay, I have this much set aside. So if something were to happen, right? God forbid something were to happen, I know that I have this set aside. So it wasn't communicated in these terms, but some of that conversation was being had.
Perfect. First bucket. Now we're progressing towards that second bucket, okay? It's 2nd and 3. We only need 3 yards. We got a little extra. We could take a little bit more risk. And so getting into that second bucket, Zach, what does that look like? And what are maybe some options when it gets to the second bucket once the first bucket is filled?
Yeah, that second bucket is the public markets. And so what are the public markets? It's simply just ownership in great companies. You need that first bucket full, but now you can actually take some shots down the field and your money can grow. So that's like, it's a little more aggressive. It's a little more risky, but remember, risk and return, they're always related. So you can't have your money grow fast without taking a little bit more risk. And that's why you have that first bucket. The first bucket is protecting you. That second bucket is to go out there and have your money grow even faster. And so ownership in good companies has always done well, not just the last 20 years, the last 100 years. And so for your money to be able to grow faster than just having all that money in the protective reserve, I mean, it just makes sense, especially, that's where the bulk of my money is. And so those returns have been really, really good, especially, last 10, 20, 30 years, returns have been really good. And that's what helps support, the rest of your financial plan.
That's good. If we got ourselves in a position where it's 2nd and 1, and now we can really take some shots. And we're going to talk about the private markets, a little foreshadowing. But Jeff, before we do, if you can explain for us in a general, very, very, understandable way, what's the difference between the public and the private markets?
I'm going to use a kind of funny analogy, but it's like going to a club, right? Which you're going to all laugh at that I'm using a club analogy, but I'm going to use it, right? So public markets, anyone can stand in line outside of the club. As long as you're dressed decent, they're not going to boot you before you get in. You can wait as long as you want to get in, right? You can go into the public market, right? Private market is the VIP section. You got to go through somebody to get into, right? That's the private markets. You got to know somebody and they got to know who you are and want you in that section. They want their section to look good, right? So the biggest difference is access. Anyone can invest in the public market. I can go log on to an account, make an account in 20 minutes online, and I can buy Apple stock or Tesla or Amazon and put in my account. That's public. Or protective reserve. I can go and buy a loan from the government and have it in my account and fill up bucket 1, right? Bucket 3 that we're getting to, the private markets, you got to know somebody. And even if you know somebody, you can get into the kind of cool VIP lounges, but you're not getting into the VIP of the VIP lounges, right? Even if you know somebody. And private markets, that's where you want to be. Those are the companies that you got to know want someone to get into. Think of ChatGPT, everyone's using it right now, right? OpenAI is their company. That's one of the biggest private companies in the world right now, right? Or on their way to being one of the biggest. That's the VIP lounge you want to get into, but you got to know the right people to get into that lounge.
Honestly, guys, I can't overstate this enough. The thought of Jeff being in the club actually just made my day, right? And that was a great analogy. Speaking of being in the club, I want to land the plane with you, Zach. So we already set you up. It's 2nd and 1. You get a chance to take a shot now. And we've talked a little bit about the private markets, but I want you to specifically nerd out because I know not only do you sit as a certified financial planner, but in our firm, you also sit on the investment team. And I know you love talking about the private market. So explain that third bucket being the private markets and why is it important for NFL players when they reach that level of income to be able to invest in the private markets?
Yeah, so once you've established that protective reserve, you got a good chunk of millions in public investments. Now you can become qualified for those private investments. And the SEC, Securities and Exchange Commission, not that football conference, it actually doesn't let you invest in private investments until you have a certain net worth, or even another advanced one is qualified purchaser. So there's certain investments you can't even invest in unless you have enough money in your investment account. And so once you do qualify for those, when I signed my second deal, my second contract in Seattle, I wish I would have put a bunch of money to work in private investments, specifically venture capital. Because it is statistically, if you just look at the data, you look at the past, who is the best players on the field when it comes to private investment? Venture capital. It's average, especially if you can get access. And as an NFL player, you should be getting access to the best investments in private markets. Those returns have been over 20% annualized. So your money is doubling about every 4 years when you have access to those kind of managers and those kind of investments. Just like Jeff mentioned with OpenAI, those are the type of investments you want to get in when they're called seed stage. They're just about to start growing. That's when you want to start just really you want to be able to put money into those when you're so young. The trade-off being that you will lock your money up for 10 to 12 years. And so that's why those other two buckets have to be right before you can actually even put money into privates, because that 10 to 12 year lockup of your money, that means you can't get access to it. And so you have to have the right plan. And then all of a sudden, not just venture capital, but private real estate, there's other private investments, leveraged buyout, those other good funds out there and good ways to get that access to those things that return even better, have your money grow even faster than those other two buckets.
So let me wrap this all together. Start off with saying, I start by watching film with my son, who's a quarterback. And we go, as we look at the route combination, we go, what is your progression? When it comes to NFL players and you're thinking about building multi-generational wealth and primarily through investments, you got to go, what's the progression? Number one is that first bucket. First and 10, you want to be in things that are safe to protect you in case of an emergency. Once that bucket's filled up, now you can get into the public market, all right? It's second and 4. You can do some things and take a little bit more risk. If you find yourself in the position financially where it's second and 1, and now you can take some shots down the field, now you can get into the private market. If we've talked about something you're going, I'm interested in understanding that plan in depth and in more detail, because it has to be more complex than that. It is. We would love to be able to answer your questions or provide more resources for you. So please reach out to us. Our number is 602-989-5022.
This has been a production of AWM Capital, the Athlete Family Office. Reach out to the team at athletefamilyoffice.com or by calling or texting 602-989-5022. All opinions expressed by the hosts are solely their own opinions and do not reflect the opinion of AWM Capital. This podcast is for informational purposes only and should not be relied upon in any manner as professional advice or an endorsement of any practices, products, or services. There can be no guarantees or assurances that the views expressed here will be applicable to any particular facts or circumstances and should not be relied upon in any manner. You should consult your own advisors as to legal, business, tax, and other related matters concerning any investment. Clients and employees of AWM Capital may maintain positions in the securities or companies discussed in this podcast.